This is Sympatico. It's a thinkorswim study that will overlay a sympathy ticker onto your current chart in various ways. And it pegs it to the relative VWAP. So it's a percentage of change from the sympathy's VWAP mapped onto this ticker's VWAP, and it maps the variables we've got, high, low, open, close, onto it, and it incorporates volume because it's mapped to the VWAP. So what it attempts to do is anchor the underlying to the current chart. So the more they move in relation to each other, the more accurate this, more useful this study will be. Apple and ES, Tesla and ES, they all move very similarly. And it's a great way to plot variations, and so you can kind of tell when your local ticker is veering off on its own, whether it's charging ahead of the existing price action or dropping below it. So I want to run through. I've added a lot of stuff since the last video. The sympathy, obviously, this is /ES is the S&P 500. You could use SPY; it would work very similarly. Showing dots is using dots for the wicks for highs and lows. So I'll turn on dots and lines here and turn off the wick cloud, just so you can see what it looks like. So this is adding. So the dots represent the extent of the wicks, and the lines are the body of the candle. So you can see how it would look sort of as a candle looking thing. And this is how I originally created it, but I got to the point where I added clouds as a way of trying to fill in those, and I realized at that point that I really liked the way that was working. I'll also turn on the values to show you what that does. So what values does is it adds a little number that's the underlying. So ES is at 4117 here, and the cloud here that's now, instead of the dots and lines, it's the same place, but now it connects all of them in a ribbon. And so the inner one, the brighter one, is the body, and the outer one is the wick extent. So if you look at the 5 minute here, on a comparable chart, you'll see that the range of the body to the wick right in the level of the candle matches the underlying ticker. So here we have a marching up of very small wicks, and it's just the bodies, and they're all green and they're all moving up. So you can see the trend, and you can see here this is Tesla moving in relation to this trend. So as Tesla outpaces it, you can sort of see. The other thing I did, and I'll get into this later, is I've added an indicator for when it really outpaces it, when it gets to the extremes, and that's based on the actual current volatility of that stock. I've started just using the wick cloud and not really anything else. I don't really use the values because I have those other charts up already. EMA length is something that you probably don't want to mess with, but this will change how responsive the underlying is to the current ticker. So if you have a shorter EMA length, it's going to be it'll distort it more so that it matches more to the current chart. And if it's too long, then it's just sort of extra calculation. It doesn't really need to calculate an EMA length larger than I don't know what the upper length was. It was something like 30 or 40, but after that it just sort of gets less useful. But 12 has been really good. I mean, I've been using 12, and that's the default. So you can change it if you want. You can play with it and see what it does. Use low color mode is this is the brighter. I originally did this for the dots and lines because they were showing up really bright on my chart, and I wanted to de-emphasize them. So it ended up better to just use a secondary set of colors that was less bright. But for the clouds, I would not use low color mode. The indicator arrows are this is actually pretty cool. I just came up with this. This is going to use the like I said, the amount of deviation from, so the percentage deviation from the underlying, and it will calculate that as a function of the stock's volatility. So if the stock is fairly volatile, that's the threshold it has to beat, that percentage has to beat to be able to show up here. And so this is going to be just the extremes, you know. So when things are pretty far away from the baseline, this is where it becomes kind of useful. On the 10-minute here, it's even more dramatic. I mean, this is, you get a single arrow here to buy and a single arrow here to sell. I mean, that's a pretty clear indicator, and it's a sell before it even you know, finishes the rest of the move, and it ended up going all day. So I mean, obviously there's no indicator in here that says buy again, so that's at some point you're going to have to use your own wits. And the other thing you can do is calculate your own value. So the IV of this, and if you go, there's a debugging. If you turn on debugging, it will add a bunch of extra crap that you probably don't normally want. But this will show you what the percentage is at these points, and then it'll show you the IV percent of, you know, right now. And if you choose to use IV versus not, you can turn it off and just use your own manual percentage if you want to tweak this per stock to get it to be more in a range that's useful. Calculating the arrows using the body. So this is the percent difference is calculated either from the high on the high or the low on the low wick, or it's calculated on the body top on the high and body bottom on the low. And this is, if you use the arrows using the body, it's a lot more conservative. If you turn this off, you'll get a lot more arrows, so it's just more noise. But on like the 1 minute, for example, you won't even see this unless you turn it on wicks, or if you manually set the percentage to use, the percentage difference to use as the threshold. And as always, you can change the colors down here, high, low, and neutral. So you know, if you don't like these colors, set it to whatever. And again, you can put multiple versions of this. You can put 2 or 3 on the same ticker. So if you add another one, you can choose a different sympathy. So you could, like, you know, if you wanted to check against the volatility index inverse, this would just add another one on top. You may want to change the colors of the secondary one, but that kind of gives you an indication of you know, what this can do. It's pretty cool. I really like the way it's turned out, and I do think that it's pretty useful. I mean, I haven't had too many troubles trying to get it to you know, show me where I want to get in and out. Or at least show me where we've got relative strength, because one of the things that I've always done is to look at, usually I'm working on Apple, not Tesla. I was just impressed with how well Tesla matched with that. But even on Apple today, you can see it's got some pretty good indicators of, you know, where these pivots are. Didn't catch this one because the relative difference isn't as high as it is elsewhere. And that's really what this is good at, is catching those relative differences for that part of the indicator. But the thing I really like about the way Apple moves with this is that as I'm watching the price action go, I can see whether the price action is above or below, and I can tell that Apple is stronger. There's a lot more buying pressure when it's typically above the ES, and that tells me something about the stock. That tells me it's in general to be bullish rather than bearish, you know. And once things start trending downward and it hangs out more beneath it, then you've got to be careful. If it's kind of like this and it's generally overlapping, then you know they're in sync, and it's going to be basically whatever the market ends up doing. It'll just sort of follow along, so you don't have any excess buying or selling pressure against the market at that point. And you can you know, again, you don't have to use the candle clouds. This is just the extent of the wicks on this, and that just is because I'm just looking for a general range. And what I used to do was I would actually look candle by candle to see what they were doing, and I didn't like. I mean, there is the comparison study you can use that I've tried before and screwed it up, but let's use candle, and we'll leave it magenta so you can see what it looks like. And this thing is, I don't think my chart is using a left axis. I think that's part of the problem. Let me get into the settings and change that. It should be in here. I thought I'd set that up, but once you enable the left axis, then it tries to overlap it. The problem with this comparison is that it's based on the scale of the window. So as you move, you can see it changes in relation. It's really just overlaying two tickers on the same window. That's all it's doing. It's not relating the two together in any other way, unless you try to manually line them up. You know, like if you were to try to, you know, but I mean, because you can't do it on a diagonal trend, you're going to have only very short term, you know, so you can map this one up and then the next couple of tickers get out of whack and then the whole thing just sort of gets out of whack. So it's, for me, that wasn't as useful. What I really wanted was to be able to directly look at, you know, or something that was related between these two tickers. And so by pegging it to the VWAP as a percentage difference of the VWAP for each one of those variables, it actually gets pretty accurate in terms of the relative movement between the two. And that's the thing that this is capturing. It's not a comparison directly, it's relative movement between the two. And that really tells you some interesting things about, like, you know, when to get in, when to get out. It can give you relative buying pressure over time. I mean, if you were to put it on a higher chart, like let's look at you know, 4-hour chart, then you can start seeing some like bigger trend differences here as well. So whether it's kind of trading in the zone, this they're basically equal because you can see they're overlapping. This one dives down, so this probably would have been a buy at some point. These are, well, and actually, I mean, this shows up as a buy here because it's so far below where the rest of it was up here, but that's in relation. This wouldn't show up in real time on a 4-hour chart, so you wouldn't be able to use that as an indicator. And that's the other thing, is that it's because they both change at the same time. These can, like, if this is going on the current candle, you have to be careful until the candle closes. It may or may not stick around, and if it doesn't, then it's no good. It's not useful for you. But in general, I think in the 5 to 10 minute ranges, it's actually pretty good. I mean, it's been fairly accurate in terms of the extremes, but then in just sort of giving me a way to judge how the sympathy ticker is working against it. And you can use this with anything that is a sympathy of something else, like Mara and Riot, or, I mean, I've got down here, I've got SVXY on ES, and this is showing me, you know, when this gets higher than the price, this price will often start tanking below it, and it's not hard and fast, but I wanted something like this only for more generalized, and when I discovered that if I overlay ES on all of these major large caps that, you know, more or less follow the market, you can actually see some really cool things within them. I mean, just about any of them will work. Like if you dig into like Disney or Meta or Amazon or Google, they'll all show the same sorts of, I mean, some of them better than others because this is more or less tracking. And let's see what Amazon is doing with this. So I'm not changing anything. ES is the underlying sympathy, and all I'm changing is which ones I'm looking at. And you can see that, you know, I mean, that there are some pretty good indicators here that it's, I mean, this may not be as useful. See, this is why you can't just take this as a buy indicator, because it's all the way up here, and by the time you know, get down here, you've already lost a bunch of money. But it's the end of the day, so I don't know that I would be taking this trade anyway. Where it's really volatile, it's harder to tell, so I would stay away from like the first and last bar of the day, at least on a 5 or 10 minute chart. And then once you start seeing other things form up from that, then it's a little more reliable. Like this is the second bar of the day. This would be a relatively safe entry, because if it goes below, then that's, you know, you could just stop out. But if it goes up, then, you know, chances are it'll just keep going, which is kind of handy to have. And I've been using it on Apple for the last week or so, since I first started with the prototype. And it's been just perfect for the way that I use it. I mean, it's been pretty stable. Let's look at 10 days worth of 5 minute, and over that time, I mean, it's given me some insight into how Apple is moving, relatively speaking. And I've known for a while that Apple's had a lot more buying pressure recently, and this was coming ahead of its earnings report. And you can even see, I mean, like from down here at the bottom, Apple has consistently outpaced the market, and so this was just a way to quantify that. I mean, you zoom in on this, and you can see that in general, Apple spends most of its time above, well, not back here, but it spends most of its time above the ES, which because it's surging ahead in general, which I don't know what it's going to do at this point, but it was kind of handy to know that going into earnings, because it showed like really bullish activity, and with ES it disappears at the end of the day for an hour before it picks up again, which is why it may not show up everywhere. But anyway, so that's Sympatico. That's how it works. That's all the options inside. I'd love to hear if you use it and are making some bank with it. Let me know.